GameStop stock is down in value by approximately 59% since the retailer's stock all-time high in January, and the downward movement has ignited speculation about another bullish market for the meme stock. In this video, I will be explaining how the video gaming retailer's new leadership plans to transition its business to e-commerce and the reasons why the stock, GME, will hit $1,000. But before we go on, can you hit the like and subscribe button? Thank you. GameStop used to hold an important position in the video gaming industry. It was the spot to buy the latest video game consoles and games. The company, based in Grapevine, Texas, turned stores, usually in malls, into hubs for gamers. You could always get your hands on the just-released games. But, more importantly, you could save money by trading games you were bored with for new ones or used ones. By being a used game bazaar, GameStop remained relevant, even with the competition from Amazon, Walmart, and Target. Back in 2016, GameStop ran 7,117 stores. And in the 12 months ended in January 2016, sales at stores opened at least a year rose 4.3%. But now, many people just download games to their phones or computers. Now, GameStop is transitioning into becoming an e-commerce giant like the likes of Amazon in a vision spearheaded by its new chairman, Ryan Cohen. Activist investor Ryan Cohen built a significant ownership stake in GameStop in 2020 and started pulling strings to change the company's operating model. Specifically, he wanted to let go of the stagnant brick-and-mortar network and refocus on e-commerce plus online services. The most valuable part of the GameStop package, in Cohen's view, was the time-honored brand name and the nationwide community of gamers that it had fostered over the years. He has successfully restructured and rebranded the company into becoming an e-commerce giant. In January 2021, a short squeeze resulted in a 1,500% increase in GameStop's share price for 2 weeks, reaching an all-time intraday high of $483 as of January 29, 2021, on the New York Stock Exchange. This effect was mainly attributed to a coordinated effort by the Reddit community r/WallStreet bets, a subreddit dedicated to stocks with high market risk. A surge in the stock price in extended hours trading occurred after Elon Musk made a post on Twitter that included GameStonk about r/WallStreet bets and a link to the community. Matt Levine has compared the situation to the 2012 short squeeze that the SEC charged Philip Falcone with. There are 4 main reasons why GameStop stock was targeted, and the whole ordeal involves a slew of factors: Wall Street greed, financial instability, and the astonishing power of the internet's collective will. GameStop has been called a meme stock. The internet speaks for a stock that was heavily influenced by people online. In February 2021, GameStop announced that its finance chief, Jim Bell, appointed in June 2019, would leave the company on March 26, 2021. Though no official reason was given for Bell's departure, the company said that it did not have to do with a disagreement with the company or its operations. In April 2021, George Sherman announced that he will step down as CEO of GameStop by July 31st, 2021. Also in April 2021, Ryan Cohen, founder of Chewy and a large GameStop shareholder, was named chairman effective in June 2021. On June 9th, 2021, GameStop appointed former Amazon executives Matt Furlong and Mike Recupero as CEO and CFO respectively. Furlong took over the position of CEO from Sherman on June 21st, 2021. The potential future of GameStop online trade-ins. Game trade-ins, and their subsequent resale, are the lifeblood of GameStop. In September 2020, when Cohen initially purchased a significant chunk of the company's shares, he privately proposed a plan to the board to focus GameStop on e-commerce opportunities. One example of those opportunities is tied to GameStop's core business, reselling used games. Cohen reportedly proposed an online version of the retailer's infamous game trade-in program. During recent talks, he proposed a major expansion of GameStop's online footprint. Beyond just games, GameStop's online store would offer a wide range of merchandise and prioritize fast shipping. GameStop's new chairman, Ryan Cohen, aka Chewy's founder, is betting a big chunk of his wealth on disciples of outgoing Amazon CEO Jeff Bezos' unrelenting take-no prisoners in the pursuit of winning culture being able to completely revamp the struggling gaming retailer. A supportive and enthusiastic retail investor base gathered in person at the GameStop's Grapevine, Texas headquarters, and on social media fixated on the company's annual shareholder meeting. At the meeting, GameStop announced that Matt Furlong Furlong will be the company's next CEO effective June 21st. According to his profile, Furlong has spent 8 years and 8 months at tech beast Amazon. He joined in October 2012 from Procter & Gamble as a senior manager of vendor development. Furlong has spent the last 2 years leading Amazon's Australian business. Serving as Robin to Furlong's Batman, Mike Recupero was announced as the company's next CFO. Recupero begins at GameStop on July 21st. Where did Recupero get recruited from? You guessed it, Amazon. Recupero has spent the last 17 years with Amazon, rising the ranks through the e-commerce giant's finance functions, per his LinkedIn profile. Most recently, Recupero held the CFO position of Amazon's North America consumer business. The latest Amazon defectors will join several others recruited by GameStop from the tenure of Jeff Bezos' CEO rule, which ended July 5th. Elliot Wilk. Wilk started as GameStop's chief growth officer on April 5th. Wilk spent 8 years at Amazon, ending his stint at the company as a director of Amazon Fresh stores. At GameStop, Wilk is focused on growth strategies, improving the chain's loyalty program and marketing. Jenna Owens. Owens began as GameStop's chief operating officer on March 29th. Owens logged over 4 years at Amazon, ending as director, general manager, distribution, and multi-channel fulfillment. At GameStop, Owens oversees business intelligence, fulfillment, supply chain, and store operations. Her LinkedIn profile says she is hiring at GameStop. We wouldn't be surprised if some of those hires come from her former employer. Matt Francis. Francis became GameStop's chief technology officer on February 15th. He had the shortest stint at Amazon among GameStop's new leaders, leaving as an engineer leader for Amazon Web Services after a year to join GameStop. Francis now oversees GameStop's e-commerce and tech functions. Essentially Cohen, who no doubt knows Amazon well, having battled them hard while launching pet product seller Chewy in 2011, has packed the GameStop's executive ranks with deep experience from the best retailer on earth. Not a bad move, especially considering they all likely know each other. Camaraderie is important on an executive team, and are cut from the same Bezos leadership cloth. And frankly, surviving Amazon's intense culture for a number of years earns each executive a gold star in this writer's book. If any group is going to position GameStop correctly for the next decade, it's these executives who were hatched inside Amazon's winning culture. What's more, the positions for all the executives are arguably the highest ranking ones they have ever had in terms of organizational hierarchy in their careers. They are probably hungry to pull all their learnings from Bezos' cutthroat culture to work, prove themselves, and within 5 years run a larger company. Again, smart moves here by Cohen to hire for one part motivation, one part the experience on the resume. And to be sure, the newly implanted GameStop executive team is going to need every ounce of what they have learned at Amazon. As GameStop's latest earnings last month show, $21 million adjusted operating loss, gross profit margins down 180 basis points. There is a ton to fix. Reinventing a chain that has thousands of tiny stores that just sell low-margin gaming hardware will not be an easy feat, but it's viable. I believe Cohen and his team would transform GameStop into an e-commerce giant, but the mountain climb will be tough. However, it's very doable. And keep in mind, the turnaround will be playing out in a very public forum thanks to GameStop being the OG of the meme stock movement. That means Furlong will have perhaps one of the fiercest CEO jobs in corporate America right now. He has to show results quickly to keep the faith of the meme stock army, or risk sending the stock down the drain. He has to please billionaire chairman Cohen, and also along the way, he must build a good relationship with Wall Street, which still matters. Also, Cohen has embraced the mischievous spirit of Elon Musk as he pursues a GameStop comeback. Like Tesla Incorporated's prankster king, he posts goofy and sometimes mysterious images on social media. A poop emoji over a picture of a Blockbuster store, or the stuffed bear from the movie Ted using a bong. That's helped him win over the Reddit crowd, which turned GameStop into a so-called meme stock, a ticker that trades more on social media buzz than fundamentals. Cohen also looks to tap the culture and ideas cultivated by Chewy, which he sold to PetSmart and a British private equity firm in 2017 for $3.35 billion. Exceptional customer service is one of them. Wide product selection is another. There also are parallels between pet owners and gamers that Cohen can draw on. Their purchases aren't merely transactional. Both sets of customers tend to be deeply emotionally invested in what they buy, and there's a strong element of community around pets and video games. Customers tend to treat employees as experts, helping them select the right pet food or game. GameStop has been slow to capitalize on its soaring stock price compared to fellow meme stock AMC, which has issued more than 100 million new shares of stock this year. But last month, GameStop announced it would issue 5 million new shares, its second offering in 2 months, potentially worth $1.5 billion at today's share price. GameStop's stock price dropped about 7% after the announcement. The company raised $550 million by selling 3.5 million shares in April. In its earnings report last month, GameStop told investors that the money is being used for its e-commerce transformation as well as for the general corporate purpose and further strengthening the balance sheet. That gives investors few specifics about the transformation beyond a new team committed to trimming GameStop's balance sheet. To summarize so far, we have made 5 compelling points in this video, which are the following: the history of GameStop, the rebirth of GameStop, short squeeze, and the restructuring of the company. What is next for GameStop? So will GameStop ever hit $1,000? The answer is yes. Given the massive growth opportunities I just explained, I believe GME shares are still a decent buy at $200 levels. If you buy the shares and hold them for the long term, they should deliver a satisfactory return on your investment, hitting and passing the $1,000 mark. Is GME considered a good investment in the long term? Given all the points previously stated, my answer would be a calculated and optimistic yes. This is mainly because, as I stated, Cohen and his team from Amazon are ready to take GameStop to the next level in the e-commerce business. The fact it's a meme stock even makes it a much safer investment option, as it has the backing of the Reddit crowd and influencers. However, despite all of this, you should decide for yourself if GME is a good investment for you or not. Consider all the factors that you possibly can. Make sure to never invest more than what you can afford to lose. This way, you'll be going in safer and more prepared, and more likely to profit from the meme stock investments. That's it, guys. We have come to the end of this video, and I hope you had a great time. If you did, feel free to like this video and subscribe to the channel. Thank you.